Ladies and gentlemen, welcome back to another episode of Investing for the Common Man, the channel that helps you save not just your money, but more importantly your time with short, concise videos. At the beginning of every month, I put out a video detailing my top 5 stock picks for that month. In this video, we are going to take a look back at the month of June and evaluate those picks. We'll look at what went well and what didn't, and try to use that information to learn how to be a better trader. We knew coming out of a blowout month like May, with each of the major indices up between 7 and 11%, June was going to have a really hard time keeping up with that kind of momentum. In June, we saw some ups and downs, but I think the main theme for the month was consolidation, which, to be completely honest with you, is probably the healthiest thing for the market right now, especially with the re-emerging threat of viral outbreaks in several states. The market has been less affected by this resurgence of cases because death rates are remaining low, and we've been getting some surprisingly strong economic data like new home sales and better than expected unemployment numbers. All 4 of the major indices posted modest gains for the month, with the Dow Jones Industrial Average up 1.33%, the S&P 500 up 1.46%, and the Russell 2000 Small Cap Index up slightly more with a gain of 2.56%. The tech-heavy NASDAQ was the real outlier of the group, gaining a healthy 5.3%, led by the mega-cap FANG stocks like Amazon and Apple, both up over 10% for the month and posting all-time highs. Before we dive in and analyze my individual picks, please take a moment out of your busy day to subscribe to my channel and hit that like button for the YouTube algorithm. Alright, let's dive in. Long story short, our picks this month didn't go quite as well as they did last month. But that's okay, we're here to consider what happened and where to go from here. All of my June picks were based on the reopening, conquering the virus theme. Unfortunately, some states in the US started to open a little too quickly, throwing caution to the wind and causing a surge of new cases. But fortunately, that surge has not caused another market crash, even in the stocks we picked with maximum exposure to the negative effects of lockdowns and social distancing. Our first pick for the month of June was Abbott Laboratories, ticker symbol ABT, for their COVID-19 test kit that can deliver results in under 15 minutes. Now, I've heard stories from a few friends and doctors about certain people like healthcare workers getting these rapid tests, but it seems that Abbott has not been able to increase their production scale enough in the last month for us to really see it continue to drive the stock. This month, the stock did not see a lot of action and ended just slightly down 1.7%. This is one of those picks that might be chalked up to a good pick with bad timing. I'm going to keep my eye on this one and watch for some action, but probably won't open another position until we see some sort of confirmation of a rally on the chart. For investors with a longer horizon, this stock will probably offer some good protection from downside potential because these rapid tests aren't going to get any less relevant anytime soon. My second stock pick for June was Moderna, ticker symbol mRNA, for its cutting-edge and scalable mRNA vaccine development. After an incredibly volatile month of May, Moderna saw some healthy consolidation, retested some key levels of support, and then rallied a respectable 3.26% for the month. This may not be quite the exciting, explosive gain that you might be looking for, but honestly, this is the healthiest kind of action for a volatile stock like this one. Having some strong levels of support established, I would feel comfortable continuing to hold on to this stock as we wait for more news on the vaccine front to send the stock even higher. Our third and surprisingly most disappointing pick was Starbucks, ticker symbol SBUX. The reopening trade has met some resistance with spikes in new case numbers, and several states are rolling back some of their previous decisions to reopen and lift restrictions. In my watch list video, I identified this level of resistance on the chart, right around the $79 level. At the beginning of June, Starbucks broke out above this level of resistance with a beautiful bull flag. The chart was looking great until the market took a turn for the worse, and Starbucks came crashing back down through the old resistance instead of establishing it as a new level of support. Starbucks ended the month down just over 6%. It can be a little bit frustrating when you do your research and study the charts, but the stock still manages to move against you. But we can learn from this experience that sometimes you have the right pick, but the wrong timing. In the long term, I highly doubt that the coffee giant is going anywhere, So even after a failed trade or two, I still might consider using this pullback as an opportunity to add to my position of a quality company with a solid dividend yield of 2.5% to my long-term portfolio. The fourth stock on my watch list for June was Southwest Airlines, ticker symbol LUV. The airlines have been having a rough go of it, and I mentioned in my June video that this is a longer term pick, but Southwest still managed to eke out a 1.67% gain for the month. However, if you kept this one on your watch list for some swing trades during the month, you may have made some solid gains, with Southwest rallying almost 20% in the first week of the month before the whole airline group saw a pullback. I continue to like Southwest because it is the strongest and best equipped of the airlines to weather this storm and come out on the other side stronger than ever. On the days when every airline is trading in the red, Southwest often manages to be the only one that can stay in the green with a modest gain on those days. The analysts seem to agree with me, with several upgrades this month and a rare double upgrade from Goldman Sachs from a sell all the way to a buy just last week. I'm keeping my positions on Southwest open and will continue to look for opportunities to take more profits as the stock continues to rally. The final stock on my June watch list was Carnival Cruise Lines. This stock has ended the month just barely in the red with a loss of 2.26%, but my goodness has it been a wild ride. In the first week of the month, Carnival rallied a whopping 48% before pulling back. Investing 101, if you ever make that kind of gain in the first week of a trade, you take some profits. I don't care how bullish you are, the wise thing to do is take half of your position off so that you can realize some of those gains even if the stock pulls back. In the rare chance that the stock does take off like a rocket, that's okay. You were smart and you took some gains and will continue to benefit from the half of your position that you left on. So while the stock might be a loser for the month, I still managed to make some respectable gains on both a stock position as well as a few option strategies. Carnival is going to stay on my watch list because the big pullback may offer a great buying opportunity if you believe that cruises will come back anytime in the next 12 months. To sum things up, if we average our 5 picks together into a mini ETF, then we did not manage to beat the market like we did last month. But these stocks did show us plenty of action to potentially profit off of. If you want to use some of these more sophisticated option strategies that I play these stocks with, check out my Introduction to Options series where I break down what options are and how to use them responsibly. If you had any solid winners last month, drop the ticker symbol in the comments below. I'd love to see where you all are making money in this volatile market. Make sure you take a second to subscribe and hit that like button, and keep an eye out for my July watchlist video that will be out later this weekend. Speaking of this weekend, I hope that each and every one of you have a delightful 4th of July weekend. Until next time, keep calm, stay healthy, and happy trading.